Credit has become a major concern for all consumers in today's economy. Your credit scores can mean thousands of dollars saved or paid. They can impact your insurance rates, whether or not you get a job, whether or not you can send your kids to college, and pulling your credit will soon become a part of the admission process at your local hospital. The strength of your credit scores has never been more important. My name is Linda Ferrari, and I'm a leading nationwide expert on credit scoring, author of The Big Score, Getting It and Keeping It, and president of Credit Resource Corporation. I have personally dug into more than 14,500 credit reports, which has given me invaluable insight into how the scoring system works. And now, in this 10-part video series, I'm going to share my signature 10-step strategy called the Big Score Take Action Plan, a process that is designed to help you protect and improve your credit during a hostile credit environment. You've received this video from a professional that cares about your financial future and your well-being. And the bottom line is that if you follow this Take Action Plan, you are guaranteed to have better control of your financial future by not only knowing your credit score, but also having control of it. So let's get started with step one of my signature Big Score Take Action Plan, setting your score goal. The first step toward the success of any Take Action Plan is to define your goals. So in my business and when I'm speaking, I have this process where I'll ask my clients to write down what their specific purpose would be for having strong credit. And I want to share the top 5 responses that I commonly get with you. The first is always to live the American dream by being able to purchase a new home and at affordable rates. And usually the second most common reason is about being able to send their kids to college so that they can have unlimited potential to chase their own dreams someday. And I even had one client go so far as to say sending his kids to college so that they would be able to support him in his old age. Well, another good reason that I hear all the time is to refinance their existing home or auto loan so that they can reduce their monthly obligations, which will ultimately free up cash to make day-to-day life easier, or to lower their interest rates on all of their accounts so that they can save more money for retirement. But my favorite reason to have strong credit scores is to be in a position of financial freedom at all times, being able to walk into any mortgage lender, any auto dealer or bank, and never having to worry about being denied credit. Now, these are great reasons, but they all have one thing in common. They all require strong credit scores. So although these reasons do create a good start, in my experience of coaching and motivating thousands of individuals to commit to a credit improvement plan, I have found that setting their ultimate score goal is what creates their desire to succeed. So I make sure that all of my clients have all of the information that they need to be realistic in setting their score goal. And once they plant that number in their minds, there is little that can stand in the way of their success. Because with knowledge and the right advice, getting and maintaining excellent credit scores is possible for everyone. So let's talk about score basics so that you have the information that you need to set your ultimate score goal. Many people believe that there is only one credit score, but this is not the case. Every individual has 3 credit scores that are used by both lending and non-lending industries, and these scores are generated from the data that is stored about your credit history at the 3 credit bureaus, Experian, Equifax, and TransUnion. Now, all 3 scores are important because you never know which score the creditor will use to approve your application. For example, in the mortgage lending industry, the middle score is used. Not the average of 3, but the exact middle score. And in the instance of a joint mortgage application, the lender will usually use the lower of the 2 middle scores. All other creditors can use any one of the 3, so it's important to keep all 3 scores as high as possible. The next thing you need to know is the true range for credit scores. FICO scores range from 300 to 850, period. And I emphasize FICO because although there are other scoring models out there with different score ranges, some that go up to 900 and some that go as low as 200, FICO is the scoring model that is used by 90% of the lenders and creditors in this country. And 300 to 850 is the score range that you should use to set your score goal. Now, the higher the score, the better, and there is no single cutoff score used by all lenders. So when you go to a mortgage lender, they will be looking for different criteria than, let's say, an auto lender. Again, making it important to keep all 3 scores as high as possible. Now, in order to set your score goal, you need to know what is considered to be a good score, right? Well, not too long ago, a credit score of 680 was considered to be a great credit score. But today, excellent credit comes with a credit score of 720 to 740 or better. And I'm going to speculate that the bar for excellent credit will continue to be raised. So this Take Action plan may have come at the perfect time for many of you. Per Fair Isaac's consumer website, myfico.com, the difference of how much more it would cost today for a 30-year fixed $300,000 home loan for someone with a 620 credit score versus someone with a 720 credit score could mean $135,000 in additional interest. And that's not all. Fannie Mae has recently implemented a new fee called loan level price adjustment to offset the amount of the money lost to lenders due to homeowners defaulting on their payments. So now, any credit score below 720 is subject to this fee, and what that means for someone with a 620 credit score is a $10,000 upfront one-time fee, in addition to the normal closing costs versus someone with a 720 credit score who will not have to pay any additional fees at all. Now, if you apply this concept of savings with higher credit scores to all of your accounts, including credit cards and auto loans, just think of how much money you would save every month or over the next 5 years by improving your credit scores. So under current economic conditions, your goal score should be nothing less than a 740 to 750. And for some, I know that number will seem impossible, but I'm here to tell you that although it may take some time, it is completely possible and well worth a commitment. Also, being realistic about the amount of time it will take to reach your goal will help. If you have credit scores below 620, then allow at least 6 to 12 months to start seeing substantial improvement in your credit scores. But if your credit challenges are basic, which includes general cleanup, credit card balance issues, or not having enough credit, then all you need is 3 to 6 months. Either way, remember, every feat, small or large, deserves appreciation. And that one point can save you thousands of dollars, which could change your life for the better. Thanks for tuning in to today's session of the Big Score Take Action Plan. Remember, the professional who sent this video to you is someone who is committed to not only helping you find that perfect home or qualify for mortgage financing, but is also committed to your overall financial health. And credit is a big part of that, more than ever before. So if you like this information, call and say thanks, and we encourage you to share it with your family and friends. You can also visit my site at creditresourcecorp.com to learn more about credit score improvement and to order your own copy of my book, The Big Score, Getting It and Keeping It. This is Linda Ferrari saying bye for now, and remember, it's never too late to take action.